Good afternoon, YouTube. This is Miles from Pure Investments, and I have another video for our trading tip series. This video features a very important fundamental that a lot of people need to understand how to use, and that is a stop loss. So, why use a stop loss? Stop losses are used to minimize your losses so that if a coin plummets, you only sell off at a small percentage rather than lose a larger percentage. So, first off, let's give an example. The last time I made a video, I talked about support and resistance lines, in which maybe we can find a line connected to all the recent highs, such as this one, and we can see, hey, maybe the coin's potentially breaking out here. You buy a ton of the coin as it's pumping, you think it's going to go here, but actually the coin rejects and plummets. It doesn't even hit support, which can be found here. It just completely obliterates it and goes down. And let's see. You might have bought here, and then you might have been one of those poor saps that has this loss here. Now this is a huge loss, and if you bought in at 13,000 sats, it went down all the way to, let's say, 10,250, that's a major loss in your investment. But what if you had a stop loss, which I'll indicate by purple, here, so that when this fell here, it automatically sold off, so your loss was only this big, rather than this big. So, sorry if this got messy, but basically what a stop loss is it's a feature that you can find on practically any exchange, in which you can say, if the price hits X, then sell at Y. And this is important so that I always say in my signals to set stop losses 10% or 5% lower than what the current entry price is, and that's because I'm willing to lose 5% or 10% on a trade, but I don't want to be at a 25% loss if I don't set a stop loss. So this is very important, and I'm going to teach you guys where you should set your stop losses. So let's say we have some basic resistance we're following. Right about here. So we can see that we've had a couple bounces here. This isn't exact because I want to speed up the video a bit, but as we can see, these are all bouncing points, and a lot of people would expect to bounce here. But as a trader, I like to choose worst case scenario often because worst case scenario prepares you for the worst. And even if I'm confident that we're going to have a bounce here and moon up, I still set a stop loss below here. Now a lot of people will say set a stop loss along the support line. I think that's a problem that you shouldn't do because if you set a stop loss on the support line, it's very likely going to hit that support line and bounce, and that means you're going to be selling at the bottom right before it moons. If you set a stop loss 10% below the support line, sometimes the candle can dip through that support line just a little bit. As you can see here, there's just one little tip down here where it actually goes lower than the line. So that's important to set your stop loss a bit lower. I say a safe bet is usually between 5 and 10%, which might look like these levels, just because even if a coin dips through just a little bit, it'll bounce before it hits your stop loss, and then you won't be selling right before a moon. The lower you set your stop loss, the more likely you'll be able to survive a little dip. But at the same time, if this were to come crashing down like over here and going like this, a lower stop loss would give you a bigger room for loss. So it's all how much you're willing to gamble. What I also like to do to figure out my stop loss is look at the depth of the order book. Smith from Pure Investments made a video on how to read the order book. I basically look for where there's major walls of support. So as you can see here, there's a big depth compared to the other spots. At 8,937 sats, there's 12.6 bitcoins. So I'll usually put my stop loss right here behind that wall, just so that if the price is going to crash down, it's going to have to eat up 12 Bitcoin before it hits my stop loss. I said it there because if it breaks through a 12 Bitcoin buy wall, that means there's huge selling momentum and it's probably going to further plummet a lot. So this is a good indication saying, okay, now is a good point that you should sell off your coin so you don't get so much losses. So that's where you should set your stop loss. Now, a lot of people are also wondering how to, so I'm going to give a quick guide on Bittrex. So what you want to do is, I have no next right now, so this is just going to be filled as an empty amount, but you're going to want to first get the price that you want to sell at. So personally, I want to sell at 9,010 sats. Let's say if that's my stop loss, and then you want to click limit, select conditional, select condition, and select less than or equal to, and then you're going to want to copy and paste this value down here, and usually you want to set your sell price a bit lower so that if the buy orders are getting knocked down fast, you can guarantee a sell by setting it lower value. So I like to do this just to be safe, and basically what this means is conditional, if the price is less than or equal to 9,010 sats, then sell my NXT at 9,000 sats. So this means if the price is coming down and it hits 9,010 sats, then it's going to say, okay, sell that immediately for 9,000. I can't emphasize how crucial this is. This is why I'm able to take risks in which I risk thousands of dollars, because I know that the most I'm ever going to lose if I risk thousands of dollars is just like 100 or so, which is pennies compared to what's invested and the profit that can be earned. But I'd never invest that much if I couldn't set stop losses, because that's too risky. So also, here's an idea of taking losses and how much is required to get back from that loss. As you can see, the percentage required to recover from a loss grows exponentially. So the lower you set your stop loss, let's say if you have a stop loss at minus 20%, it's going to take a 25% gain to earn that back. If you have a stop loss at 30% that triggers, then you'll need 42.85%. Let's look at values like 80%. If you set a stop loss at 80%, or you end up selling at 80%, then you need 400% back to earn that money. So definitely you wanna if you set stop losses, you're never gonna have to go into these kinds of recoveries to make back your money, because going 400% really hard, 900%, and you never want to be broke like this chart says. I'm going to link to this chart in the video description so that you guys can reference it, and thank you for staying viewed to the video. I hope you enjoyed this, and stay tuned for the next one.